Rajat Sharma joins us on the show to talk to us about the fundamentals of the market and the latest stock picks. Rajat, to begin with, Paytm, that stock is up 14%. What explains that, and would you be a buyer at 750 thereabouts?
This is one stock that I've consistently been recommending since it fell the way it had fallen. And, my reason has been that, look, it has an amazing brand value. It has an absolutely unmatchable reach in terms of, the number of vendors who use Paytm. It's got a first mover advantage, widest network. Sooner or later, it will either be merging or be taken over by some other company. What's going on right now, I really can't say, because the ban which they saw in February this year, where payments bank was taken away from them. Quite frankly, there's a lot of other companies who follow the same practice. So really, there's obviously more than what meets the eye, but fundamentally, when you look at their accounts, they have a very clearly established business. We've given a very, very detailed research on this on our website. It's for anyone to see who wants to, search Paytm Sana Securities. It's a very detailed research. I like this stock. I've liked it at 300, 400, 500, and even at this price. Something obviously is going on in this stock, which, quite frankly, the honest answer from my side is I really don't know what that is. But I like the stock fundamentally. They've got a very, very well established business within the payment space.
Rajat, you won't share the same optimism about Ola Electric, would you?
No, absolutely not. I tweeted when the company was coming up with an IPO. I said three things, all of which have happened, which is something I shared over my Twitter yesterday. That on listing it will go up by a lot, but that's not anything to do with fundamentals of Ola, which are fairly weak. It's a loss-making company, but purely because there's an absolute IPO frenzy, and it would have been a good opportunity for anyone who got this stock to sell while they could. Right now, I think it's trading between 90 95. I'm not really sure of the exact price, but I wouldn't be surprised if it comes back to its price band of 70 76 and falls even lower. We've seen this happen in past, and yeah, I think I wouldn't recommend anyone buying the stock even at that price, to be honest.
Taken. So that's the view coming in on Ola Electric. But I would want your views, Rajat, on a couple of other big IPOs which are in the pipeline, namely Swiggy and Hyundai. But since we're talking about Hyundai, let me take it across to Shrishti to get more details, because we do understand that this one is likely to open in the coming week itself.
Well, certainly all eyes on the Hyundai IPO, and the excitement is on because as early as next week we can see the IPO opening. That, but as the reports that on 14th of October the IPO is going to open for all the institutional investors, and for the rest, including the retail investor, 15th October and between 17th October they will have a chance to apply for this particular IPO. The IPO size is expected at around $3 billion. That is close to 25,000 rupees, and along with that, the price band is likely to be in the range of 1865 rupees and going higher up to 1960 rupees a piece. And given this particular price band, the IPO is valued at around $19 billion, that is 1.6 lakh crores. And do remember that this particular valuation is actually a little lower than what the reports were suggesting a while back, because the company has also indicated the valuation close to around this particular range itself. And the reports also suggest that the company is targeting 22nd October as their first trading day. Now, just a while back, we have seen that Hyundai IPO getting the SEBI nod for its IPO, and this is going to be a complete offer for sale by the parent company. They are looking to offload around 17.5% stake in the company, and as we know that this is going to be one of the biggest IPOs in the Indian markets, where Hyundai IPO drives around 76% of their operations from the Indian market itself, and the rest is from exports. They do have a great market share holding in the Indian markets after coming just after Maruti Suzuki. And given this particular valuation, we have seen the kind of movement in the rest of the peers as well. But just to highlight that given this particular valuation at 1.6 lakh crores, the valuation of EV by EBITDA multiple for FY24 stands close to 24 times, and that is very close to Maruti Suzuki valuation as well. But given the kind of movement or kind of growth that the company has showcased in the past, and doing a forward valuation, trying to get a sense over that, then EV by EBITDA multiple for FY26 stands close to 21.5 times. That's as per our calculation. But indeed, all eyes on the Hyundai IPO, which is likely to open next week itself as per reports.
Point taken. Thanks for that, Shrishti. But Rajat, what's the view on this one? Hyundai or Swiggy? Which one would you prefer, or is it going to be both?
No, without a doubt, Hyundai, without any doubt. In fact, I was looking at the chart, the graph that you were showing. I think Tata Motors was missing from that. It showed a market share of 10% by Mahindra and Mahindra, and obviously Maruti Suzuki does have a market share of about 41%, but 14% is Tata Motors, which is very critical, which was missing in the chart. And I think what you're seeing even happen with Tata Motors is the stock price falling is now the top four players, which is Maruti Suzuki, Hyundai, which is number 2, Tata Motors, which is number 3, and Mahindra and Mahindra, which is number 4. I think put together, they would have something like 78% share of Indian passenger vehicle category. Now they'll all be listed. Hyundai, which is a big player, is now getting listed. So some money may actually flow out from some of these stocks and go into the new entrant to the passenger vehicle segment. I like Hyundai as a stock. Their cars are doing very well. They're not really leaders. Tata Motors is the leader. Sorry, Maruti Suzuki is the leader, but they've got a better product line, I do believe, and it's coming at fairly attractive valuations. Yeah, so that's the chart that I'm talking about. You have Hyundai, Maruti, M&M, and Tata Motors, which is actually larger than M&M in terms of market share. I think it's 14% or so, which is just as much as Hyundai is. So I think that bit of the pie for listed players will expand. Between the two, I would like to recommend and even try to buy Hyundai post listing. I don't really invest in IPOs; it's a big waste of time. But Hyundai, if you get it at a good price, is something you should buy and hold in your portfolio. This is a sector which should do really, really well going forward. So yeah, and Swiggy, I'm really not sure, even with Zomato, if, with all these businesses, Blinkit and everything else that they're doing. First of all, Swiggy is a second mover. Zomato has taken away whatever they could. I don't know, it may be some kind of anchoring bias. I anyways always order from Zomato wherever I am, Delhi, Goa, Bombay, which is the cities where I visit the most. And not really used Swiggy, not really looked into their accounts. It'd be disingenuous for me to talk about Swiggy and its valuations, honestly.
Right, okay, that's the take coming in on some of the recent IPOs in the pipeline, and it seems like Hyundai could be as early as just next week. In the meantime, just taking stock of what the market as well is up to and whether you're still seeing those gains hold on. At least there is a fair attempt, 135 odd points up in the green for the Nifty futures, still clinging on to that 25,100 mark as we speak right now. M&M though has powered ahead. It's almost now closing in on the 3,200 mark, 3.5% of a move coming in on that stock. Kunal, a clear winner, you think? Because, I mean, last year was all about Tata Motors, but this year clearly belongs to M&M.
Yeah, last year partly was also for M&M because I think from 750, if I'm not wrong, the stock from the bottom, and I think from there on, it's just moved on strength after strength. Yes, of course, the major part of the price rally was, on the back of the stronger move on Tata Motors, but I think M&M in the last 6 months, 1 year, I think has picked up quite well. The stock holding on to the 3,000 mark. Even this last 4-5 days of the price correction, I think that was one of the strongest part of the move for M&M. So I think it doesn't come as a surprise that on the way up and the markets are seeing a bounce, this stock is now coming very close towards a breakout of its previous size of 3,200.
Okay, talking about life high levels, it's not just Trent, Dixon, Ipca Labs, Coforge, they're all sitting at life high levels. And good amount of volumes today on the likes of Triveni Turbine as well. That stock is up in the trading session. Rajat, wanted a sense from you. Which are the sectors, apart from the ones that we discussed, that are looking good to you, or anything else that you have added fresh in the portfolio?
Yeah, so two sectors which I really like at this point. One is FMCG, which is pure FMCG. In fact, a very interesting thing that right now when you talk of consumption, even when I was looking at the fact sheets of a lot of consumption funds, They have a lot of names which are consumption, like Bharti Airtel and even HDFC Bank. It's consumption banking, but I'm talking pure FMCG like ITC, HUL, Asian Paints, Britannia, Nestle. The bread and butter companies. That's one segment which hasn't done much for a while now, and that's where we are initiating some buy. Two stocks that I have added recently to my portfolio. Actually, I did talk about it on your show last week as well, or the week before last week when I was there, is Asian Paints and HUL. And my rationale was that, Asian Paints has actually, in terms of valuation, fallen from 100 plus price earnings to about a little below 60 now. So earnings have kept improving, stock price has not kept going higher in line with its earnings. So that's one stock that we've added. Hindustan Unilever, again, stock has done nothing. Earnings are consistently improving. So this is one sector which I like, and these are the two stocks which we've added. The other sector is, well, actually, there's two places where we made some buying. Private banking also, again, it's a perfect classical case of what, Ben and Graham kind of old authors would describe in their security analysis, that, sectors which are facing problems, industry specific, otherwise there's no problem with the business. They're not getting deposits because a lot of money keeps getting invested in mutual funds and debt funds and balanced advantage categories. So there's a mismatch between deposit and advances with banks. Sooner or later, this should clear out. So, you had an HDFC Bank which used to trade at multiples of 28 plus. Today it's trading at multiples of 18 and there are no buyers. So it's a very boring stock for many people right now, but it will catch up. So that's another sector that we've looked at adding. Again, only private banking. And the third space is technology. You have Infosys and Emphasis, which are now paying dividends close to about 2%. And look, because of the whole artificial intelligence boom in the US and Indian companies being traditional legacy old models of doing business were sort of out of flavor. So large cap information technology companies is something that we've added. Infosys and Emphasis are two stocks which we've added in not all but multiple portfolios for clients.
Emphasis, even some of the private banking names like HDFC Bank, and then of course you do have the HUL and Asian Paints of the world. But talking about Asian Paints, there were these reports going around that, of course, AkzoNobel global parent is looking at some sort of restructuring of their business back home, and Asian Paints could be a likely contender. The earlier name that was being circulated was Birla Opus as well. Would you have a view there as to whether it's a good asset, whether it will be positive for Asian Paints if it buys it? What kind of consolidation are you expecting here?
I've not looked at that, but I think in both spaces, paints and cement, there's a lot of consolidation that's happening because there's a lot of capacity right now, and everybody has more than enough demand and more than enough business to cater into. If any consolidation happens, and Asian Paints being the market leader would obviously benefit from that.
Some interesting ideas and perhaps buy on declines as well. Let's also take in some BTST trades then. Kunal?
So I'll go with two buy calls. BEL is one of the stocks which I would suggest as a buy. The stock making a double bottom at the 270 levels. So would look out for targets in the range of 290. Stop loss at the support of 270. And the second would be a buy on UBL. And interestingly, the stock is forming a bullish engulfing pattern on the daily charts. So would look out for targets in the range of 2150. Stop loss at 2060.
Okay, so those are some of the top recommendations coming in right now from Kunal. What else is buzzing apart from Paytm, which is of course the biggest buzzer in town right now? You have HEG, which is actually suddenly spiked 12%. BSC as well has been doing quite well, and GRSC, the stock that Kunal was talking about, has managed to shoot up further. It's now trending with a gain of around 9%. So a lot of these big movers in the market right now, and in the last few minutes they have definitely moved up further. What else is buzzing apart from Paytm and HEG? Well, Varun Beverages is also holding out to decent amount of gains. On the losing side, however, you do have names like NMTC, Vijaya Diagnostic, SBI Life, Tata Steel, which are coming under pressure. In fact, for insurance, if we can, let's take it across to Anurag to get better sense as to how the numbers have panned out, because the latest figures for the industry were out and it looked like there has been some sort of moderation that has happened. Anurag, tell us what exactly are the numbers and the industry situation looking like?
So with the data of month of September, we have the complete details about the general insurance industry, non-life insurance sector from the month of April to the month of September. That is first 6 month H1 of FY25. So in first 6 month, overall general insurance industry, non-life insurance industry has shown a growth of 7%. Premium has reached to the mark of 1,53,000 crore. But in month of September only, there is a degrowth of 6.5%. But if we talk about the SAHI companies, that is standalone health insurance companies, both in the first half they have shown a 26% growth, and in month of September also the growth is around 25%. If we talk about the listed player, then the market leader New India Assurance, in month of August we have seen that New India has shown a negative growth, but in month of September there is a New India Assurance has shown a premium growth of around 9%, and in first H1 the premium growth is 3%. ICICI Lombard has shown a good set of numbers. In month of first H1, the 6 month, the premium growth is 15.5%. In month of September also, the premium growth is 3.60%. Go Digit, the newly entrant in the listed space. So first time we are talking about the H1 number of Go Digit. So Go Digit has shown in H1 11.5% growth, and in month of September the growth is 5.5%. Star Health, the only listed company in a standalone health insurance space, which has shown in first 6 months 17% growth, and in month of September 18.5% growth. So in month of September the growth is not shown by, because month of September the people wait for the Navratri to buy their motor, new cars, new vehicles. So in month of September, the last 1 week or 2 week, people are waiting for the October to start to buy the new vehicles. So one of the reason, because motor insurance also constitute around 30 to 35% of their overall book. So September figure is down by 6.5%, but overall H1 growth from April to September is up by 7% for the overall non-life insurance space.
Right, okay, that's the update coming in from some of the non-life insurers. Closing in for the market right now, and it's definitely been a choppy last 1 hour, but we've, I think, managed to cling on to the gains quite okay. 25,150 thereabouts is where we're shutting shop for the day for the Nifty futures. Adani Enterprises, Adani Ports, M&M. These are some of the biggest movers, and of course so many bright stars within the broader end of the market.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.